Ladies and gentlemen, as we wait for Fed Jerome Powell coming here in just a couple of minutes, that's going to be a big catalyst on the day, or really throughout the rest of this week and most likely next week. Some people even still think there is going to be a pause, so it's going to be wild, and we're going to cover that a lot in the next video. Here in this video, I want to talk about everything you need to know here on the day with AMC, why AMC is more muted with this rally rather than GameStop. AMC was up about 10% in after hours yesterday. The stock up about 3% today, whereas GameStop is up 41% last time I checked. So we're going to get into all of the numbers that you need to know on AMC, on GME, and get into kind of what expectations are for Fed Jerome Powell as well. And likely by the time you guys are seeing this video, Fed Jerome Powell's first statement will be out, and then at 2:30 p.m. you're going to get the press conference, and that's going to give you that final move that's going to solidify what direction the markets are going to go. So let's get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. So first things first, with AMC, I want to point this out. AMC and April 27th is going to be a very big day. And like you can see in this article, it says April 27th is a key date for AMC because as of right now, AMC got the yes vote, but we don't know if it'll hold up in court. But people are kind of thinking that it will. You haven't really got the opinion articles. You haven't got contrary views to this. We have very little information around this court date, April 27th. It says, meanwhile, AMC shareholders have experienced a slew of news in recent weeks. Last week, it was confirmed that shareholders voted in favor for a 1-for-10 reverse split and increase in authorized shares. The approval of these two proposals opened the door to converting AMC Entertainment preferred equity units into AMC stock. However, the conversion and proposals will be placed on hold until at least the results for the preliminary injunction motion related to two punitive stockholder class actions are revealed on April 27th. So we only literally have the opening argument, I guess you could say, that AMC management, Adam Aaron, the executives, they took away AMC class action shareholders' votes. By doing this deal with Intera Capital, they essentially rigged the voting process. And that's what is going to be argued in court. And I think obviously that is what happened. It's pretty easy to see. Hedge funds got involved in this trade. They bought Ape. They voted yes for this, and it was a done deal because of the deal with Intera Capital. People already seen this as a home run because of that deal, so they piled in, right? And then they voted yes and made it more of a home run kind of vote. So that's important. Between now and then, the stock will be somewhat range bound until we get news, until we get information. GME having good earnings, that's good, and honestly I would have expected AMC to hold up a little bit more, but there's still this pressure on AMC with the shorts that just pound the stock anytime it's going to rally. And that's exactly what you're seeing happening here today. If we go ahead and take a look at AMC, go ahead and pull it up. It's up about 3% currently on the day. The cost to borrow rates as well are spiking. That's something I want to talk about as well. The live short interest of free float sitting at 24.22%. I imagine it's going up a lot today after seeing this rally really get muted. It's these hedge funds that are involved in this arbitrage trade that are still going out and shorting the stock every chance they get, every time it rallies. Cost to borrow average at 360.33%. Cost to borrow max at 390.16%. Cost to borrow minimum at 328.15%. 60,000 shares that are currently available. 215.5% cost to borrow rates are what we are seeing right now. This is showing you volatility is still here. The uncertainty is still here. Bottom line, And this really eats away the potential profits of shorting AMC going long on APE. When you're paying 200, 300, 400% cost to borrow rates, that is very much unsustainable. And you have to be, one, very confident in your trade, or get out of that trade as soon as things go south. And that's what a lot of people are starting to point out, is the fact that the cost to borrow rates are jumping exponentially ever since March 14th. And that's actually the headline of this article. AMC Stock Alert, cost to borrow AMC shares just spiked. A high cost to borrow could signal high short seller demand or scarcity of available short shares. Goes on to say that can cause a short squeeze. As you guys do know, it says right here, imagine paying a 196% annual fee to borrow a stock. That seems excessive and would require a trader to have a high degree of confidence in their trade. As a result, a high cost to borrow lowers the chances of emerging profitable in a transaction. A high or rising fee could also influence short sellers to sell out of their positions by buying the underlying stock in a bid to escape the high fee. This could ultimately increase the chances of a short squeeze. And I think when we get more news, that's where AMC really sees its day to shine. And I think we should be getting some kind of news just around the corner any day now. Now, let's go ahead and run through GME numbers, and then we'll talk about Fed Jerome Powell coming on here in just a few. The press conference, don't be confused by the move we see at 2. The press conference will be very, very important. If we go ahead and look, boom, 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 live short interest, we could see GME's numbers almost identical to AMC on the short interest of free float, sitting at 24.23%. 63.33 million shares that are currently sold short. Cost to borrow average 53.5%. Cost to borrow max at about 74%. Cost to borrow minimum at 33.72%. Cost to borrow numbers from interactive brokers at 30.5%. 250,000 shares that are currently available. Now, Fed Jerome Powell, that's really what is going to dictate the markets today and throughout the rest of this week, because it's hard to imagine how the markets could be bullish out of any of this. Some people are still expecting the Fed to actually pivot, right, and pause, whereas that is not priced into the markets, and that would give you likely a lot of downside. That would likely tell markets that this problem is bigger than what we think, and there is probably things that we do not know. 17.3% chance of a pause, or at least that's the probability priced into the bond market. 82.7% chance of a 25 basis point rate hike. So that's probably what we're going to get. And then the Fed, the language is going to be important. Do we get a 25 basis point rate hike and hawkish language, or do we get a 25 basis point rate hike and dovish language? That's really the big question in the air. And if you get 25 basis points and hawkish, like kind of how it feels, right? Inflation is still going higher. You're getting very inflationary data that is still coming out. It does not seem like the time where Fed Jerome Powell wants to start talking dovish and start pivoting. After all, the yield curve has started to uninvert. That means short-term yields have started to fall, right? That's not what they wanted to see actually happen, right? They want to see the yield curve inverted. They don't want to see the yield curve normalizing again and short-term rates going lower. They don't want to see that. So it's going to be very interesting. This is going to be the biggest Fed event that you are going to see in all of 2023, because this is really going to set Fed policy. You're also going to get a dot plot, which is going to plot expectations for GDP, which is going to plot expectations for inflation, for the Fed funds rate, all of that. So you're going to get not only the statement of what Fed Jerome Powell says, you're also going to get estimates from all Fed governors of where they think rates are going to go. All these things are going to go. People are going to compare that to December, because Fed Jerome Powell just said a couple weeks ago that if they were to come out with a summary of economic projections now, and that was about 3 weeks ago he said this, they were to come out with it now, it would be higher. The forecast would be higher than where it was in December. Well, now that you have a banking crisis, is that still the case? Do they still see a higher terminal funds rate? That's a big question that will be answered today in just a couple of minutes. So that is going to do it for this video. We are going to cover Fed Jerome Powell extensively here in the next videos, go over everything he says and what kind of implications it has for the markets. In the meantime, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.